Good people, how are you? Yep, we're talking to you on the Crypto Sniper channel, and we're talking about XRP and giving you a crypto update in terms of where everything is. So this is XRP. So a couple of things you need to understand. It's the dollar too in all of this, and we've had a little period of dollar strength. I mentioned before, dollar is not your friend if it is getting strong. It works against you generally, and it works against crypto as a whole. However, despite all of this, we are setting up such a key basing period that even with moderate strength dollar in time, crypto will still be able to dominate in spite of that. But generally, when slowly building and setting up, you ideally want an environment which is dollar weak. That said, in spite of a small pip, and we will go past the dollar and maybe even the debt markets for you, but this is crypto channel predominantly, and if you want to go deep dive into debt markets and other things, you need to subscribe at the Market Sniper, where we tend to handle the traditional markets in greater detail. So what's been happening? This is a messy old chart. Well, we can take you into it. I've actually got it on the weekly time frame, so a quick macro back down to micro. So we've told you we have a special secret 60 timeser. That's right. That has actually shown massive relative strength even against the benchmark of, say, a Ripple right now. That's going to do even more than the 33x that is probably implied by the $47, $48 to 48 cents to the $16.77 with a likely run of the $77. So this is our overall structure. What are we putting forward in our primary thesis? Let's just remind everybody from a top-down point of view that there is a basing process going on here, that you'll likely run some levels here. You probably have some pullback. There's a chance you even go as high as that, which is going to be around the $1.08. I'll drop into a bit more detail before a minor easing and then a bit of dull, maybe what I call low volatility price behavior. Now, the pullback doesn't need to be that big. And it's certainly not to time. I'm not predicting this to only transpire in 2025. I'm extending this and making it larger so that you can see it more clearly. But the net result will be a breaking of this third high to the upside, in our opinion, on balance of probabilities. So that would see this lead very promptly to a move that does something like that, where you would only roughly rest. If we can just get that to move, $4.05, maybe get a rest at that point, sharp pullback, and then a blow-off move that will take you through 16.7s. I'm expecting the 17s to run. You could even go a little bit further. So this is going to be your status token. This is essentially, for many people in traditional technical analysis, just an assumption of triangle. This is more specifically Hunt Volatility Funnel method setup, which you can learn much more about, how to implement, and how you can truly blow the hinges off what we call an extreme risk reward opportunity. We've got a risk reward in there. We can just show it to you. You can see in that case, get that menu to disappear and pull the chart through a little bit. There we go. That's about 121.38. Who wouldn't like 121.38? You think, how's that so big? Remember something, we are in log scale. So this is much smaller relative to the green area than it looks geometrically because of that log scale. So it's just a key point for you. So with that said, that's your macro. So what's been going on? Well, the interesting thing is, when you've done your first two impulses, you tend to rest and slow down. And this is a little bit about where we are at now. And I'll take the eye off for a while so that we just get a clean chart. Lots of alerts so we know as it is moving. Got to use the alert system. It's a very useful thing. It's a tripwire. You're catching the tripwire as people are coming through your door. You are being notified. So you can see this has got an upward tilt to it and is getting lower by volatility. That just means a lot of the super expansive period, that was another key volatility event which we've highlighted before. But once you get a blow off, you can get these big rejection candles, and then it's quite hard and rough. And then you're getting up. This was very volatile again, and then some strong downs. Those three candles are not very welcome, and were strong downs. When you start to get this range trade that you're getting now with a slow upward grind, most people think it's boring. Well, listen, you've got to watch for potential pattern structures. If you've got a very good downside flag, it could be perceived bearish, but not when in the context not when in the context of a structure like this. So typically flags, which some people might think that is, are of a greater concern when you've had a key capitulation after a localized high. When you're getting lots of support, and we'll drop into that on the lower time frames to remind everybody as to why, even though it's a quiet, and actually Ripple had a relatively disappointing 2 weeks. You had a lot on Bitcoin Cash. We saw, and I referred to this in a previous video that you were watching, you saw the Bitcoin proxies that are essentially cleared from the SEC getting a bit of a bid. Now imagine how when that uncertainty, let's say, gains or steps down, someone else comes in that's more accommodating, wants to see the technology stay in America, a little bit different mood music, how the whole story might just pivot. And this is what I anticipate could be coming for us in the not too far off future. There will become some clarity. So let's drop down on the weekly time frame. By the way, this little poll here was quite a useful little poll, and you can see some people that know their short time frame technical analysis will recognize that as a bit of a pennant. Looks like a golf flag, by the way. Anyway, so dropping down from the monthly into the weekly. Now, what you're actually getting here is pretty much a rounding out of the bottom. So you made lows, then lower lows, but only marginally so, and then you failed to make a marginally low. So this is a process of where a selling momentum that was quite brutal eventually bases out, and what you end up getting is something like this. And as a result, that is very, very calming and also typical of bottoming structure. Then you get this bullish move that I've already highlighted on the bigger time frame, that instead of being rejected like the first time bullish brought the way back down. You didn't get very far. That was a round tripper. That was the first attempt. The early bulls got a little bit put back in its box. Of course, there's news that might have been behind that. But typically, when you go up in a bearish environment around news, that is a very bullish sign. And we're starting to get a little bit closer to that. So I'm dropping from the weekly back down to the 3-day, which is kind of a half week in crypto speak. We have 7 days of trading, of course. And what you're actually getting is this squeeze in here. Please take that black label away. So starting to get a bit of a squeeze in here. Now, I'll pull that through, buy us a bit of extra space. So what that tends to mean, and individually at a candle level, so recognize all this is on quite big time frames. The benefit of big time frame is that you have plenty of time to sleep on a trade idea. You don't get carried away by the optimism of a particular moment when you're feeling kind of perky and up for it, and etc., and super bullish, and your mood was to be a buyer, etc. You get to sleep on something and look at it through different, more jaundiced eyes, more cynical eyes, maybe later. And the key aspect of it is it should be shifting and changing only gradually, and your scenario should still hold valid. It's one of the benefits of big time frames. They're more reliable. They give bigger targets, and they get you behind the key move of the moment. This was, for example, a great example of something that was technically pulling back, but was actually very low volatility, with lots of hammers, buying wicks, particularly near the end, just before the push up. 4-5 in a row, hammers. Now I'm showing you a hammer here, literally a doji body there, that's virtually open, the same as close, a small hammer there, and another hammer there. That's 3 hammers, and then very low vol. Yes, it's down from its open. We've got that stronger dollar now, but it's like, meh. In truth, for 3 days, this is a nothing candle. Now, we might have only started this candle. Let's see when the candle started. How many days of data do we have baked in? 3rd of July, we're the 5th. So we've got 2 days baked in, what's left of the 5th, and then we've got a final day. This is going to be a low volatility candle in spite of the emergence of a little bit of dollar strength. So in short, XRP has actually gone down less than a lot of the other cryptos have recently, particularly the ones like Litecoin and others. We'll come back, actually, I'm going to come back and do the XRP dominance, but you can see on dominance where it was shedding some dominance, again, 3 hammers. Small time frame, not too volatile hammers that are showing that the dominance is no longer slipping back down. It had done exceedingly well, and then the last 2 weeks less so, as the Litecoins and the Bitcoin cashes of this world, and even Bitcoin and Ethereum, of course, were tricking up. So this is in of itself also a potential as a fractal just in its own, like this, a winding up structure for bullish upside for XRP. Especially when you start seeing bid getting in. This makes this whole zone. Now listen, we got non-farm payrolls. Of course, we will be doing a live trading day for that, and you can see that come in and join us just for that day and get 3 hours of the time, an hour and a half on crypto and an hour and a half on traditional markets with a break this Friday. But that's not the point behind that. That's a data point that's coming in that may have influence on how the dollar ends up turning out for the week, inflation expectations. So the other half of this pair here is going to be potentially leading the narrative into this weekend and how Sunday afterwards and the Monday open. But longer run, it's what's going on for XRP that's going to matter. So there's a lot of guys sharing a lot of news, a lot of different people that are pointing out that they've embedded themselves from the get-go with the banking system and the central banking system. They're the ones who've established the relationships. Their system sends the money quickly. You can go and follow Twitter, where there's a large XRP community that will be keeping up to date on narrative. My goal is not narrative, but the narrative is the other side of the same coin. What we're actually seeing is this is calming down for an up leg, this structure. And I want to highlight something while we're on here. This I'm treating as a standalone structure. But actually, if we just take some of the dollar aspect out of this, you can see there was the big spike and the pullback down. If we go and put that on, say, the euro, we actually get a slightly different look in on it. So we're just reducing the dollar-specific aspects, and we go to the XRP on the euro, and you can actually see that it could arguably be part of a far larger structure across the lows here, where this is essentially your bottom of the bear market. You can see the volatility there. Look at that candle. That is just capitulation, a little bit of snap back, and then marginally lower low in the end. Calling that. That was pure fear. Then you got a little bit of counter attack and then pullback. So this first impulse could already be there, and then you've jogged on for your second, and you're actually making the third. So what could in fact be happening is you're getting an opportunity to get in at one of the latest points. This is just changing the fiat. Remember, cryptocurrencies across all fiats, not just the dollar. The dollar just happens to be one particular dominant one that may not actually have that same degree of dominance in times to come. So benchmarking it against a lot of currencies is certainly worth your while. Again, a hammer here and a hammer there. Let me just let you see that a bit better with a bit of a eraser there. 3 hammers and a very, very spinning top. So while it's slightly red and close to its low against the dollar, actually it's a nothing candle for the 3 days, and you've got 2 of them already baked in. And that's typical low volatility. That's what this is. It's a squeeze. We trade the squeeze. This is your squeeze that is going down right now on XRP against one of the biggest currencies in the world. You can see how well it was bought up. It didn't get a chance to trade as low as that. So this is happening. The buyers are coming in under this, and they're already coming in under this higher up than you might expect with these small hammers and this calmness. So you go sideways and nothing. It feels like nothing. That's bullish. That's super bullish. For the people that are in the move before the move, that is bullish. So that potentially allows you to have stop losses, placements that would see you could at the worst have a stop there. And some people could speculate on hammer lows. You might get another hammer that goes a little bit lower, so you could get shaken out there. But you could have stops even higher there, and you could be getting in with a limit order. You don't have to rush. The non-farm number comes out Friday. Maybe the dollar gets a little bit of a bid and you get it another stab down and another rejection hammer. Could easily see that happen. Data can be more volatile than usual, so it could be a deeper hammer. You might even be able to buy below this. That's the danger of having a stop here. And then it just gets shrugged off by the end of Friday and comes back up to where it was. Why? Because they're going to say, the labor market is amazing. We've created so many jobs. People have never had it so good. They're working so hard. Everybody's got 3 jobs and delivering pizza, etc., etc. What an amazing economy. And as a result, that will point to the rights to keep pushing up interest rates to fight inflation. They're not doing a good job. In fact, they're actually, instead of tightening in terms of liquidity provision, John Williams of Shadowstat says they're actually proliferating on the liquidity front, even though rates are going up. And I think things would break if they were truly tightening. So anyway, so that gives you that opportunity to get in during a squeezing period for a great move to the upside. So what is that upside, you might ask? So using our unique HVF method, which, as I say, you can learn and be part of and watch and implement live, sees at least a 76 cents just off of this structure for the upside in euro cents alone. So just off this structure alone, as part of making that far bigger, remember the weekly and the monthly. Let's go weekly. You don't have enough history here to get the original first impulse, but against the euro. Remember, I'm still on the euro here. I'm not going to go back to the dollar one just for this, but you're in all of this. So we need that third high. This is this low to cupping area. We need that third high. A perfect little run somewhere there, a little bit of a churn, blow off and a rest, and you will then have, again, on a far bigger time frame, your 3 impulses. 3 is a magic number, my friends. You will learn all about that and more as part and parcel of watching us trade the HVF method live in real time on cryptos, etc. So when this breaks, this is then what was your $16, $70 and $17 run, probably a €15 plus run, 14, 15 euros, if you were to draw the same target. Just not enough history on this Binance platform for the XRP against the euro. So you see how we're actually getting fractals in here on the smaller time frames that are setting up the impulses that we need on the bigger time frames for the eventual move. So you can see the eventual move isn't tomorrow just yet, but the smaller job of creating what we need for that eventual move is very well on its way. So going back to our XRP draw, here we go, and continuing this narrative. So you could argue that on another number of levels that there are other structures. So what I like to see is when you see general pattern structures across the board that all imply the same thing. So price behavior actually should be confirmatory. So I just pull this through a little bit. You see there's a lot of lines, a lot of draws, looks messy. Oh my God, such a mess. No, you should draw on your charts. So we highlight a neckline here in and around the 55 cents, key round number, just through the 50 cents. The 50 cents itself, look at the blue line sitting there. Just run, just run, just run. Little head and shoulders there, by the way, beautifully brought you back down. Just run, just run. We highlighted this very low vol squeeze with all the hammers near the end. That gave you your surge. This took you through the 50 and through the 55. This also made the 55. As a result, we like this from a point of view of seeing it as a W bottom. This low, whilst higher than that low, is pretty similar in terms of its size. So you get what's called a W bottom draw. You see that all the way up to that 55 and then pulling back down. So you actually have big fat Koki in pink. Let's do fat Koki draw. Keep it simple. People understand simple. You have this. Get it? Where that's your 55 neckline. And what you now have on top of that, good people, is you have what we've already described on the shorter time frame, a winding up structure that's going to lead to a higher break. So when you have got a break, key and say goodbye to key levels, such an important level that you've been pivoting around either side, 50 cents. We've been a little bit above, a little bit below, a little bit above, but generally more below. Iceberging is the comment I typically use, where you have small periods above 50. So this is the 50 blue line over here. You have iceberg moments there where the bulk of the price action is hiding below the 50%. There you see those black zones are little bits of iceberg where you have the good old traditional 85% below. What tends to happen is you need real momentum to smash through that level technically, and that's in fact where we are getting to now with this. You will go back above the 50 in my opinion. You'll do a little bit more iceberging and then calming, maybe resting in support above the 50 before that break comes. So not only do you have that target, which is around the 70 cents, of the wind-up HVF structure that we are showing you in here, you have it as a triggering, cascading pattern that will lead to further falls towards higher targets on a bigger time frame. So yes, you may rest a bit after making the 70 and the 71 cents. Fine and well and good. But on the bigger time frame, you have begun the triggering event of that W bottom, where if I take you back up to the weekly side, you will see has a 107 target. So are you following this? Hopefully you are. So this is quite a lot of pattern within pattern study. Quite a bit of pattern within pattern study. There's the W, there's the neckline, here's the squeeze under that. And that is the third high that we want to see, which will take you to, you guessed it, another key level. So when you are breaking and need to leave a sub 50 zone where you've only spent 10-15% above 50 and get all the way to the point where you're doing the same, only now at the dollar mark, where you're iceberging on the dollar and you're trading just a small amount above the dollar in between, but otherwise quite close to it, with big periods below and then small amounts above, to get into that zone, which is essentially a move in and around, I'm arguing, around 50 cents needed, just to get you so that you're now aspiring to a hold above 107. The target of 107 will actually get you out very close to a high, which might be 110, 115, 120. And that then gives you second high, your third high on the bigger time frame that we've already described. So that is kind of where we are at. And then you rest again. You rest again. No leverage trades long there. You want to take a little bit of profits. You'll be able to put them back on. Occasionally, however, don't take them all off. I will keep investment pot throughout this. I won't be jumping in and out on investment pot. On trading pot, moderate light leverage for this period here, as we complete this process and smash and run here. That's going to be very, very productive. The cost that you have to factor in for your margin to take you up to there will be covered by the profits substantially of any such move. You may rest here for a while before that 107 and then you iceberg there, and then you'll calm down again somewhere between the 70 cents and the $1.10 with a little bit of iceberging, and then you might drift off a little bit, and then we are ready for the main event that is the one you all want. So I'm trying to give you the sequence of events by doing cross time frame analysis, looking at XRP, not only against the USD, but also against the euro and other fiat currencies, which have a slightly different DNA, which has helped us explain why on the euro you actually have in terms of the euro, you have a particular structure all the way like that, which holds, that doesn't quite hold because these highs are higher than that high on the dollar. So that was just a matter of timing when the dollar happened to be reasonably strong and didn't allow that rally to go much further, where it did against other fiat currencies. So this is that you're at 1:121 risk reward, by the way, if we turn out to be accurate on this cascading. And I'm here to say to you that this is almost too far negative. You could certainly have that stop under here. That would make it 166.7. It was probably 166.66 and they rounded it up to 7. And you could also be, bear in mind, buying at these levels. And I would put a little limit order potentially on the non-farm payrolls, and then I would bring the stop up to there. And now we have to go back up and go move that target that we've now moved, that's no longer at the 16, no, it's still roughly under 16.7. So now you are actually seeing a 1 is to 292.29 if it succeeds. And my overall opinion is, yes, it is. By the way, for those that like other patterns, they will be pointing and mentioning things such as, this is kind of a double cup. It's a complex cup with a double handle as well, like that. So you could also view it as that. But these are also very bullish structures. We don't tend to use that. We get better targeting out of what we use. But it is part and parcel of a saying goodbye where you are iceberging at 50 and starting to do the same thing in the £1 mark range. And that represents real progress. And then, as I say, an easing. And people will wait and people will get impatient. And you could even go quiet for a while. Or it could shock you, like the first cup gold nugget did on Bitcoin, and go run fast. And the problem is if you aren't in early, you run a chance of missing the chain. You could do just a very small third high with a minor pullback for the 3 low and just go. And that means you're not on the train for the $17 run. Boy, wouldn't that be a pity. On the YouTube channel that told you about a 33x that actually is giving you more than that. You can get in. What's the price right this second? Let's go and do that. It is 47 cents. 47 cents to $17. Well, let's go 16.77 and stay with the numbers we got. Divide 47,685. 0.47685. 35 times 0.1. 35 times 0.1 on your return. As I've said, quite a few steps to happen. They could take long, they could happen faster than you think. I can't give you exact time frames, but this is probably the last time that you're going to easily get opportunity to accumulate XRP sub 50 cents. My overall opinion is when you leave here, you won't likely come back all the way to the 55 or 50 cents range at all, especially if you get north of £1, £1.10, and then pause. You could have, who knows how that pause would go, by the way. You could take a while doing it. You could do it quickly. I don't know. You could make a falling wedge for a while and get back in there on a break here, and that could then be the big run. That's the $17, the $16.77. Who knows how it could be? It could take longer, shorter. We will see. Price behavior will reveal itself as and when we get there. However, don't forget, there is one that we think is going to do virtually double this, and is really attractive, and is in the top 20 tokens and has sufficient liquidity as well. So you can learn out all about that coin, and you can also join us for the analysis on it on the live trading days. But it's not knowing the name that's going to do you all of the favors. You've got to know when to get in, when to get out, and how, if using any moderate leverage, how to exploit it so that you can get even a touch more. I just want people not to round trip and give back 70% of their high water mark. This is the problem. The key problem for guys that have done crypto bulls is they give half of it back, and in many cases more, and some lose and actually have less Bitcoin, less money than they had when they started, because they don't know how to use leverage. So in that case, you really need to be watchful and you need to be low. Investors often round trip, sort on Hex, sort Solano, sort on everything. They go all the way up to big money, ADA, all the way up and all the way back down. So we're here to change that. What's that worth to you in terms of your net worth, in terms of your setup for reset season? This has got to be worth a small fortune to you. And that is our sole goal: wealth building in reset times, and ensuring you don't round trip the high volatility assets, where there must always be a point that you take money off the table. Targets, especially when all the headlines turn uber bull and everybody is late and everybody is charging in and talking it. That's when you feel you're most confident, and it's often when you should be heading for the door. And real experienced people will show you and remind you of those events. Anyway, so that is the XRP. Some folk will also point out that XLM will be part and parcel, the alternative, the Pepsi Cola to the diet, to the Coca-Cola. If XRP is going to be the Coca-Cola, XLM, some people, certain Arabic nations, for example, have already said if the one does this, they'll do that. It kind of means that they want to be different. Some people will argue that XLM actually has slightly better technology. I'm not going to get into the weeds of who's better and who's worse. I think there's a lot of things that have to be borne in mind. It also comes down to the relationships that have been built with the central bankers. VHS versus Betamax. Betamax was probably a better machine, but VHS won out because they had the movies. So it's not always, the minutiae of which one currently happens to be better that wins out the day. So yeah, XLM, let's see, I want to have a look at a different XLM. We've done some draws for XLM. So XLM is lagging for me. Let's go Phoenix. But is in a similar structure. So a reminder of that structure. This one doesn't have the history, but there is, okay, let's go the other one. Let's see if there must be one that has the history. There it is. Let's have a look at that. Does that have the history? That's got more history, but a crazy wick. So ignore the ridiculous wick. But on most structures, that is higher. So that essentially came down like that. It's very tough. I mean, one or two of you will probably give me a version where I can get the history and also not have garbage. But essentially you have that. You can see you're a lot earlier in coming off the low twos, where that is low one. You're a lot earlier, so it's a slightly further bit behind, which is why we're over focusing on XRP. But it is in the similar camp. It is in a similar camp. So it will likely move, but you will get chance and you will see it. And it may well be lagging in the initial instance. So we want to move our money around from the best and get the big moves out of the others early. Your best, the early movers are usually your best. So you broke out and your return moved. Let's make sure we're still in log scale for all of this. Yep, we are. So you broke out, your return moved, then you started to go up to the one. This is also a key 10 cent level. And this is an 11.3. So you've got a similar W bottom on this 11.3. Similar W bottom, just simplifying the draw with that. And that already has an 18 cents, just to get you going as part of everything. This is a long tail, very bloated second impulse. It's typical. And it's what we expect. Third with a third sell, and then since then. That's your three impulse falling wedge. Standard, regularly see this in crypto, boom, 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 and that's your break. You squared up the end of the down. But, it's got a lot still to do. It's got a lot still to do, and I would say in the statist central bank token arena, XRP has done more. And is better set right now. But I don't doubt that this one will be a follower. So for the guys that want Lumen mentioned, that's what I've got for you. And, it was a pretty 3-year, 2.5 year low of around 7 cents, and it still can be had for sub 10 cents at around 9 cents here, with a possible move to 18. So it's a 2x, which isn't exceeding the Ripple's 46, 47 cents to the 107. It's pretty similar. So I'd chase the liquidity and the earlier mover. Always prioritize the earlier mover in a structural pattern when you have two that are both in similar patterns. Which one is the earlier mover and more advanced in getting to that point? XRP is closer to making that third high in terms of that, so we prefer it. We prefer it on the bigger time frame. So a little bit of that. A couple of other things that could highlight XLM. That's just doing cross token analysis. I'm just going to choose XRP and I'll choose an other Let's go here. In fact, let's go the dominance. I said I would do dominance. So the other thing that we really like is that you should see, when compared to other cryptos, the tendency for it to eat more of the market share. The tendency for it to eat more of the future market share. What is it doing? Actually, at a market share level, XRP, like a lot of tokens, runs hard to the upside and then bleeds for a long time to the downside. When it's out of favor, it bleeds to the downside. It ran hard 17. In fact, it superseded previous highs. Spilt hard, pumped hard, but the bleed outs can be lengthy. And this, from the highs here at around 12.5%, this was a very lengthy bleed out, nasty spill that slammed that, and I think that was the beginning of all the legals and being highlighted specifically for security status, which I think has kept it capped, which is kind of ideal. I think this is a price managed by a news token, and when they uncork it, they could let it go in a very big way. This is the 2% range, so you can see that this 2% range is kind of the low end here, which you've only run at this bad level and a tiny bit here. So we've stuck our feet through the floor occasionally here. But for the general time of its existence, most of what it's had is above the 2% line. So let me just draw that one more time with Fat Koki. Long live Fat Koki. So this, the modern era of XRP, which is kind of pre-2015. So here, from here, you've only had, this is like inverse iceberging. Those rare moments where you are below the waterline. You've generally skimmed above the waterline. Those rare moments where you're below the waterline. So the 2% is what I'd call a soft floor level. Clearly, it's not a hard floor because you've gone below it. Hard floor in its worst moment was way back then at 0.72. There was another one at 1.1, but they didn't last long. They get rejected quite violently. So if we talk about the upside, these bodies are quite big of period above the waterline, for want of a better phrase. We can see this. So it actually represents that we are just above the waterline right now and here. So it's a rare opportunity to secure relatively low market cap relevance for XRP. So those points are probably well made as well. So rare opportunity there, and the last chance was these much smaller. And the thing is, as the volatility is getting lower, the extremity of the moves, this is the kind of spike moves, and then there's the more just dipping below flatter moves. So that's kind of where you're at. And this as a structure, again, similar structure. If we go for that low there, a little bit of basing, then we go up, we go for the low there, and now we are squaring up in this range. So churn, churn, chop, chop. So what do you think on dominance? Just looking at that chart happens. What do you think? We think up. You could think down. I wouldn't agree, but on balance of probabilities, we think. And probability is not an absolutist thing. It's not binary, light on, light off, as I was explained. It's a probability as like these altmeters on these old stereos and needles. At the moment, the way it's set up now, I would say the probability far more is it's up, and if that triggers to the upside, which typically happens in low volatility compressants, fast, impulsive moves that take you strongly away from your entrance, where really tight risk is possible, so that moderate margin can be applied to give you a super boosting, expansive reward. That is the game. That is HVF method. This is what we focus on. This is what our entire community is about. Book a call. First link in the description below. But that point made aside, I am saying for you, for free, right here on YouTube, giving me the best of my intellectual capital, that 3% will go. There was a level that was interesting. We got the 2% and the 3%. So this is probably the longest period. Let me use go back to Fat Cokie again, and make this point, because this is truly valuable. So I've drawn the absolutist of the modern era here too. But there's an interesting 3 as well. So there's multiple levels of significance here that are playing out. And it's one of those rare moments where, and I think this has got a lot to do with the SEC. So look at this. This is your 3% level that you have been under since there. You barely broke above it. You've been under the whole time, this 3% level. So it's the holding and straddling the 2 level, but it's really looking to the future to get back above the 3% range, where a lot of the time for XRP has occurred. Well above the 3% range. However, this entire period, since 2021, you have largely been under it, and it sits over you as, again, a soft ceiling. So we've spoken of a soft floor, we've spoken of a soft ceiling. This is a coiling. When you get entrapment between support and a resistance, a kind of support that you sometimes just run and spike back out of, and a resistance that you sometimes just get above but are rebuffed fairly shortly, you're like this, and you are in an entrapment, and what you get is compression and volatility. So overall, where do you think it's going? Well, it's been below the 3% line. It's been below the 3% line. And my suspicion is that this entire move is going to see it get well above. In fact, so much well above that you could see the likes of 6 and 8% being run, 6.2. Where did those come from? So the other thing is, when people talk about targets, so many people just seem to suck their thumb, and I don't care to think where that thumb was inserted. We have real technical reasons as to why we'll throw a number out. We're not Max Kaiser telling you that Bitcoin's $1 million at the end of the year, or Joe Schmo saying 250,000 because it's a nice round number. On what basis does anybody ever just say a number like that? This is the thing with technical analysis. You get real patterns and real targets that are generated by the natural geometry, which show a real consistent habit of being good exit points, or staging posts that can be a pause for an extended period before new continuation can take forward, which is very useful to know when you're paying, the better part of $5,000 for 6 weeks of leverage for a nice juicy size long. You don't want to necessarily hold that each month if you're going to actually pull back and spend a whole bunch of time. It's not necessary. So you can reduce the leverage, hold on to the investment, and then get back in. And this is the plight of the trader. So this is a super W of great volatility, and that was its neckline. You guessed it, 3%, a key level at a number of moments. This was the very limited time you had above that. Since then, you have been essentially basing out, gave another go, and doing whatever comes out of this. We'll talk more on that in a minute. But when you get back up to that 3%, that implies the possibility of an 8.1% run, in our opinion, on our targeting. So it is 8.11 as a potential target. That's a big target. That was a big smash down. There was a lot of geometry that was generated. What about the overall structure that we've highlighted to you here? This. Well, that has targets so far, and we're guessing. I don't think we get down here again. You see those 3 little hammers there? I'll drop a time frame. Let's do that for you. It's a bit hard to spot. You need to get your magnifying glass out. That's already pointing to Ripple not going down as much as the rest of the crypto market right now, as the dollar gets a little bit of a groove on. those three wicks point to being bought up. So this, in terms of its down leg, probably starting to show some element of rounded bottom again, which means it's going to start working its way up. In short, that potential stop, I'm guessing where a low was, not really guessing, it's too bearish for me, but I like to leave a little bit of upside room to every possible scenario. But this could be here, that could be in which case our structure from when we would project is even higher. If it was in now, I think that's a bit aggressive to say that. It could go a little lower. So this is going from a fairly negative scenario to a reasonably optimistic one. I would say quite an optimistic one. Potentially unlikely. You could get, especially with non-farm, you could get a little hammer wick down, but don't think it will be a lot. Maybe you'd get a revisit here. I don't think you'd see. This is higher highs, higher lows. There's your low, higher high, higher low, higher high, higher low. We're already quite some way down. I think you could already be there. So if that were to be the case, and we go back up weekly, and we were to see where those draws would bring you, you're going to be in and around this orange key structural event, which is midpoint 6.42 as a target, which is not heading you towards that direction of 811. You won't understand this, why this orange line is there. You can find out if you join the community, but there's a technique that we use that's called tops and tailing and looks at the entire range of something. So in short, this is going lower vol and is potentially basing and has a 6.5. Now hang on a minute, if you're just above 2, so this is bugging me, it says 2.01, 2. If this is just above 2, sitting at around 2.15, and you end up at 3 and some change, 3.25 of 2, which is what 6.5 is, 3.25 means in an environment where Bitcoin is doing really, really well, your particular token is going to be doing 3 times better. Wow, that points to a bit of catch-up. Who isn't interested in doing 3 times better? This is the difference between multiplying yourself to greater wealth and adding yourself to greater wealth. You want to be in the right tokens at the right time. Don't marry any narrative. Don't marry any narrative. Don't be a complete hater. Don't be a complete lover. Don't fall in love. It's not a decision of a lifetime. You want to build wealth. Some things that win will win for a long time. Some things will win for a short time. Some things will never win. And you know, you got to be prepared to say, I'm taking off. I'm taking off right now. So this overall is showing that the performance of XRP is going to start dominating the total market cap again. That means it will be doing better against Bitcoin most days, better against Ethereum, better against most tokens on most days. Not all of them, not some small micro cap that goes up 100x that you can only buy $1,000's worth of, and you shouldn't even bother be trying to catch because it's pointless, because when you come to sell, you won't have the liquidity. But this has liquidity, it has real reasons that it could do rather well for you. So yeah, I think that's it. What else did we want to say about the chart? Oh, well, we divide it by, I'll just take for fun, XRP, USD. What's another, let's just take, let's take a token not so many people talk about. We rarely give coverage to this one, but it's in the top 10 ish. Is that Bitfinex as well? So if you're dividing XRP by TRX, XRP during this period underperformed quite dramatically, but this is against another token of this size. And you can see it's also squeezing, and what we would anticipate is that it's going to outperform. So they are both in the top 12, 13. So that's why I chose them by market cap. 11 and 6. Top 10-ish. Outside of the stable coins. A lot of stable coins that won out. Meme token, I don't really do much comparing with doggy. So it's a reasonable one. Could have also done Litecoin. So if you have a look at that technically, what do you see? Again, an end of a down leg and a movement up, and likely at some point, not tomorrow, not next minute, not next hour. There's some boring bit to happen before it breaks, but break it will. So I would say in the next 10 to 2 weeks, you're probably going to have either some news, which is typical, or you just get a technical event without any clear news, but then you hear something later. Because the technical moves always show up before. Just for fun, let's throw in Litecoin. It's a bit of a Bitcoin proxy, so it's slightly different. So you've had a strong move out of Litecoin as the Bitcoin proxy. And actually, when I look at this, you had that Litecoin run. It was a bit of a recent move. It's a difficult chart to read that. It's got so many, they're both a bit volatile. It's got so many plunges and snap-ups. Again, though, I would argue, fat Koki, simplifying a very complex chart. Fat, hey, give me my draw. Ignoring the skittishness. Well, maybe you shouldn't do that. It still feels a bit like that. A little bit volatile between the two of them. In other words, one's running when the other one's not. It's a bit of a scraggy. I actually feel the previous comparison was a better one. Let's see if there's anyone else we can compare it to. Ethereum's done relatively well. It's quite a hard one. What about Bitcoin? Bitcoin itself. So Bitcoin has been the early runner. Bitcoin has been the early runner, so let's put him in. And it's also gained in dominance. So Bitcoin is a hard taskmaster recently for other tokens to be compared against. Let's put that in. Looks very much like the dominance chart. You've got, so I'm not sure we're getting anything new here. And you've got to decide which direction is that going. And for me, I'm calling a bottom on the downside of XRP to Bitcoin, which at one point had 1, 2, 3, 4, 5 zeros and a 6. 5 zeros and a 6. And at its best point had 3 zeros and a 2, 4. So it's massive. I mean, that's 100 difference at the decimal level. Of course, a 6 is higher than a 2, 4, but still, it's, even if it was a 3, you're talking about 50 times swing in relative valuation. You've got to ask yourself now, is this done? If you remove also the final capitulation plunge, there is a little bit of a rounding out, failure to make new lows, marginally lower low, failure to make new lows, and I think we're stopping there again. So it's a tricky one to call, but XRP looking really, really strong. Find out what our key other crypto that we are in, and there are others that are doing rather well. We'll be talking inside our community around where we see Litecoin going. That is still going to continue to benefit, and that's going to be an upside. We'll talk more on its upside gains. That could mean after a correction on Bitcoin Cash, Bitcoin Cash could resume under the SEC cleared proxy until such time as clarity is provided. Okay, guys, that's the update on XRP, XLM, and why the good days are indeed coming for those tokens. A little bit of a tease on the mystery token. Also, remember the live trading day this Friday, where we will do a deep dive on crypto for an hour and a half, and also on the traditional markets. Dollar, I had mentioned, was getting firmer. Before I close, I will just point out how and why that is. You can see gold is slightly off, a little bit nothing too interesting, a little bit dull, a little bit down. And other proxies. There is, of course, the debt markets where the rates are creeping up. We go into that more in the market sniper, but you can see we have concerns that rates are going to go higher on the long debt as well. Also on the 10-year, have a look at that. I can show you that on the 3 days. 10-year debt rates going high. Very much around at bottom again. So guys, if you think this inflation battle is over, well, I'm here to tell you it ain't. They aren't doing real tightening, and there's still a stimulus game going, and rates are getting higher. Rates are going to get higher in our overall opinion. That is down on debt. Do not a bond buyer be. But we're here for the dollar, and let's do that. We'll show you the Dixie. So the dollar index is, of its own accord potentially, let's reduce that a little bit, of its own accord potentially also getting a little bit of a setup here. And reasonably strong upside momentum. We wonder if there's not a bit of zip that will return to the dollar. That is not necessarily good news and can make these patterns extend before they give you what you want. So we'll have to watch and see, and hence we will be keeping an eye on the non-farm payrolls. An undershoot on the number that points to weakening employment would imply a capping on the rates going up. You'd see a slowing down of that 10-year going up, and more dovishness, and that would also soften the dollar and actually be good for crypto and gold. Okay, thanks for watching. Click the likes, hit the subscribe, book a call, first description below. Costs nothing to have a chat. We're happy to speak to you, show respect and show up on time, and we'll look forward to telling you more about what we will be doing in our community as we maximize our wealth building in reset times and the capital preservation thereof. Till next time, I'll speak to you then. Bye for now.